Hello and welcome back to Bunnex Investment Group, and if you are new, welcome to the family and hit the subscribe button so that you won't miss any new content that we upload. This channel is dedicated to giving traders several strategies as well as tips on trading forex and any other tradable assets. So in this video we are going to be talking about points where we expect to see banks making their trades. So it's actually a wish for every trader to have knowledge on where the banks are going to be involved within the markets, because everyone knows that whenever these guys get involved in the markets, usually the markets will actually respond in that particular direction. So as you all know that this channel does not waste time in explanations. We go straight to the point. We will need, actually you need to have a background of counting levels. So basically, if you are new to that concept, levels are basically impulsive rises or drops, and we'll have a cycle that consists of 3 levels. And if you want to know more on that stuff, you may as well sign up for our advanced course using the link in the description box below. So what or where do banks get into the market? So the first thing that is needed by banks is accumulation of orders, actually providing the liquidity that is going to fuel their contracts whenever they initiate their trades. So how do they accumulate? So we know that a completed cycle of the smart money or the market makers consists of 3 levels. So in this case, I'm going to count 3 levels going downwards. We have the first one, the first level, right, which is the first impulsive drop. Then the second level, another impulsive drop. You need to know the higher time frame context. You just don't start like what I've done. I am aware of the higher time frame context. That is why I just started from that point. So in this case, we can see that we had 1, 2, and 3, and after those 3 levels, we had a long period of consolidation. So in our lectures with my students, we all know that after 3 levels of drop, the market must chop, and usually at level 3, we usually stay almost forever. It's just a phrase to remember that at level 3, the market needs to accumulate before making its move. So in this case, where do banks enter or initiate their trades? So the next point that we anticipate to see the banks or the hedge funds, large financial institutions, to open their trades is at level initiators. So by level initiators, that is where we expect to see what we call order blocks. So if you are not aware of order blocks, you may refer to our videos on this channel. We actually have a playlist of that concept. So at this point, there was an order block, and at this point, there was another order block. So this was an order block, then another order block. So basically, an order block is a band of price where the market makers will actually need to retest so that they will add another portion of contracts in line with the initiated trend. So in this case, they can't or they will not respect this order block. Why? Because it's actually within the consolidation phase. So they required to actually hit stops of those induced to go short within these positions. So the order block, or the point where these banks were going to get in, was the second level initiator. So you should always respect the level initiators as your order blocks of higher probability. So in this case, the market actually went to the second level initiator, and you can see the market went down quickly, right like that. So big money was actually made in there, and then after that we can see them coming back to that same zone, and right now they are in a downward move. Let's have another example of this particular concept. Right? So we said the first thing is actually to have the knowledge of levels so that you would know the level initiators. By level initiators, meaning the points where the market makers have their orders or are actually placing the first part or portion of their ultimate orders. So in this case, I'm going to take this as my data, and I have the higher time frame context. So that is why I am starting from that point. Then level 2 and then level 3. We now have 3 levels of drop, and at level 3 we reverse. So after that reversal, where are our points that we anticipate to see a reversal or entry of market makers? So we've said the level initiators are the points of higher probability order blocks. So we have one as the level initiator for this level 2, then we have another level initiator for the level 3. In this case, they actually respected the level initiator for level 2 to continue their downward move. So in this case, where did they actually buy? They actually respected this zone. First portion of contracts was actually injected at this point. We can see the market went down. Second portion of contracts was introduced. Then third portion of contracts was induced. That is why we later saw that the market went away. So these reversals were actually achieved with what we call cyclic trading between banks, bank A buying from bank B, bank C, and so forth. So in this case, that is why we had the drop. So this is another point to see that the market makers or the banks respect what we call the level initiators. So let's have another example. So this is a USD card, right? I know as well the market context of the higher time frame, and you should also know that so that you have your levels counted in a proper way, right? So in this case, I'm going to take this as my datum, and from that datum we had the first drop, right? Then we had the second drop from this point and its consolidation. So it was its level and its consolidation, and then the third level from this point going downwards to this zone. At level 3, what have we said? We actually reverse. So at level 3, if we get a reversal pattern, that will be solid gold. So all this stuff is actually explained in our advanced course, and you may as well learn more in that course. So after we have 3 levels, we expect to see the market makers respecting the level initiators. The first level initiator was for level 2, and then the third level initiator was for level 3. After that, we can see the market actually respected level 2 initiator. So someone may say, when or how will we see the market makers respecting level 3 initiator? So usually on level 3 initiator, we have a market maker pattern, which we talk about in the advanced course. So if we get a market maker pattern, and it also depends with the EMA that is available on the level 3 initiator zone to actually make a trade from that level initiator. So in this case, we actually saw the market come back to the level 2 initiator, and this spike was definitely something that was done to take out stop losses before the market shifted, like what is happening right now. So I'll be expecting to see the market actually keep going down, but there may be some choppiness as we'll be going down. So basically that is how banks actually enters the market. It's actually one of their techniques that they use. It's not something that will always apply they have a lot of techniques. If you actually look for a book called Hedge Fund Trading 101, you see that they have a lot of techniques to cheat the markets, as well as allow their contracts to be filled, and also points of market entry. So it's up to you to keep on studying on the methodology. And on that note, we come to the end of this video. Thank you for watching. Like and subscribe.